Hi guys, this is Martin at Livemarkets.live. Welcome you to another trading session today, 10th of July. We have currently two trades that are running, which is a short Euro USD and a long USD JPY. If you have gone through our previous videos, we have for a week now been suggesting, we have been warning about the impending US dollar strength that was to return. Now this is a chart we had looked at. Let's look at the dollar index. Yeah, this was the chart we had looked yesterday. If you remember, the dollar index has corrected from 95.5 to 93.8, and we did say yesterday that this is going to be probably the end of the correction, because we have this uptrending line, the 50 DMI, and every uptrend before it continues will take a test of this line of the 50 DMI, and that's just happened. It's tested it, and there was very good chance that it was going to hold. Now, whether it was going to hold or not hold cannot be wetted in this chart. We went to another chart, which was the US 2-year yield, which we saw was bursting higher yesterday it was 2.56, and today it's just gone higher, 2.572. So the chances of the dollar index correcting and below this line was very slim, because higher yield and the US short-term rates was attracting significant amount of capital, and therefore, so dollar index has, as we suggested, has taken support at 93.8, and now we see this uptrend to continue. The significant upside left right now, it's at 94.2, and we can see the rise today, tomorrow, and this entire week we should see dollar index rising. We see that this is now headed much higher. We can't put a finger on where this is headed. As we looked at the weekly chart, we saw that there is a possibility that this could go as high as 100 or possibly 102 as well. That's because its upper Bollinger Band is very stable. It's expanding, and in an uptrend, an expanding Bollinger Band will normally attract prices there. So we expect this little confluence resistance at 95.5 to be taken out fairly soon. You can see that this is a strong uptrend here. It's shown no signs of reversal or no signs of topping out, and therefore we could see a continuation pattern forming here on the dollar index weekly. So those who have gone long at 93.8 are sitting very pretty. You could just pull your stops to 93.81. On the Euro USD, the stop would be somewhere 1.1780. And those who haven't taken a shot yet on the Euro USD can now safely take. Now this is the Euro USD weekly chart. It doesn't tell us much, but if you look at the daily chart here, you could see that Euro USD has just gone above the 50 DMI, but it was just about, it was failing there because the dollar index wasn't dipping below the 50 DMI. So this move could be considered a fake move, and you could go short at 1.17412, or if you get 1.1750, where you could keep a stop above this level here. The ultimate stop on the Euro USD short should be above this high here at 1.1801. Keep it at 1.1810. We don't see it going there, but well, just for safety purpose, you can keep it above the highs on the day when Draghi pulled it down. So now Euro USD, we believe, is now going to proceed down, and we see significant downside. Trouble in Germany, especially with the opposition members of the Bavarian camp, who are against the migrant deal, and they've been creating a lot of trouble for Merkel's coalition. And after a long time, the political stability in Germany will be threatened, or is being threatened as we speak. And traders are watching that, and therefore they are shifting positions out of the euro. They're not ready to take this higher. On the other hand, the dollar is gaining a lot of strength because of its higher rates, strong economy, stable politics. So things looks very good on the other side, and therefore the dollar is a natural long and the euro is a natural short. So be short here. Don't play for the small 10-20 pips, because the ATR of this pair is nearly 50-60 pips on a day. So it could clearly wipe you out if you're going to keep a stop below 50-60 pips. So that's a euro USD. We are sitting pretty on that. Just taking a look at the USD JPY, which is the other trade, and yesterday it was at 110.4, and we did say that we don't see it dipping at all. Many analysts were issuing all kinds of shorts, but we said this is going to go higher. We had looked at the Nikkei index, which was rising. We also looked at the S&P, which we said will go to new highs, and it is on its way. And all those things normally support the USD JPY trade. So just as we said yesterday, it's now at 100, and yesterday it closed at 110.9, and today it's moving higher to 111.414, and therefore it's a very good trade. Be long this pair, and when this pair does move, it goes very quickly. So the next target is 112. We don't see it stopping before that, and that's where it will become a little overbought, 112.2. So it's a good 100 pips from here, 106-7 pips. If you get any dips, you buy it. Very safe trade to take. So long USD JPY, short Euro USD, that's our trade. Now let's look at another currency which is a possible trade, which is a USD CAD. Just looking at this trade, it's a strong uptrend. You can see that this is just a trend line here. And there was a correction here from outside the Bollinger Bands. It came down, but then correction stalling. There is a Bank of Canada meeting this week. They expect it to hike, but that doesn't really make any difference, because a hike will take the short-term Canadian rate to 1.8%, whereas the US rates are 2.6%. That is a massive 60 pip difference. So a hike or no hike, USD CAD is a favored long based on the spread. And this uptrend will validate that. There could be some spike down because of the hike, and that will be a very good chance to go long. Don't take it while the spike is happening, take it on the next day. So we like this long trade. We're not trading it, but this is just a suggestion for those who are into this trade. If you short this trade, I would suggest you get out of the trade now. Not a very good shot. On the other hand, we have the Australian dollar. There is a nice little bounce here, but I think the steam is running out of this pair. We see new lows coming. We believe 0.7. This is an easy shot because of the trade tariffs on China, and Trump is going to expand his tariffs on the Chinese goods. And China yesterday said they will back the Iran deal. Europe also said they will back the Iran deal, and that is not a good thing to say to the United States at this point of time, because the economy is really strong and they're just raring to go after put new tariffs, and this will give them additional reasons. What they said yesterday. So Australian dollar, we believe, is going to fall. Just looking at the COT data yesterday, let's look at that. These are the two trades, and they're doing fairly well. Let's push it down a little bit now. This is let's look at the Australian dollar. This is a COT data. It was updated today. Yesterday, the Commitment of Traders released the data, and we could see that there is the COT pair index. It's something that we follow. It's about 18. That's very high, and you can see that it's been above 80 after a long period of time. In fact, I can't see the last time it was this high since 2016. So these are extraordinary numbers. There it is. The last time it was this high was somewhere here, which was back in 2014, and we could see that it fell from 90 to 6970. So just be very careful. Australian dollar is now primed for a fall back down to 5.9 or 0.6. Don't go long. There is no scenario. There is no reason why you should be long the Australian dollar, neither from price action, nor from funds positioning, nor from spread data, nor from Chinese economic fundamentals. So things look really bad for the Australian dollar. We believe this is going to fall to well below 0.7. That's for sure. Possibly to 0.6 as well. The Commitment of Traders data, the commercials are very long, the Australian dollar, which means Australian dollar is negative. Just let's look at the COT index for USD commercials, and you can see that this is starting to fall, and that is showing US dollar strength. There it is. We have COT index for Australian dollar. So we're looking at these two separate, and then we've divided that to get the COT pair index, and you can see the Australian dollar's commercial index has gone nearly to 80.85. That's 83.9. So whenever commercials go long to such an extent, expect that the underlying to fall, because these are hedgers. They have underlying things to sell in Australian dollar, which is why they hedge the exposure by going against what the price action is going to be in the future. So when this goes up, the prices will fall down. So we like this trade, and we think Australian dollar is now ready to fall. A very solid 400-500 pips of fall is left in Australian dollar. Similarly, for the USD CAD, if you look at the weekly, you could see that, where are we? The pair index, you can see for the USD CAD has now fallen to 20. That suggests that it will go higher. The last time it went to below 20, we rose from 1.2 to 1.4. So again, another currency which is giving us clues that things are going to get very strong for the US dollar. So be short CAD basis the fund positioning. What about the USD JPY? That's a weekly chart here. Again, the pair index, COT pair index is climbed above 80. That suggests that the JPY USD, not the USD JPY, this is the JPY USD commercial index. COT pair index is climbed to above 80, which means the pair will go higher. And the last time it was here was just for a brief moment here, but for a long period of time it was above 80 in 2012, and we know this was a mega rise from 96 to 125. So be long. We don't know where it will lead. We'll just continue to watch the weekly charts to see how long and how far this is going. So that's it. Those are the main pairs that we are trading. Nothing has changed. We continue to be long the US dollar, and we suggest the same to all our clients. The Algo 2 is trading very well. It trades a USD GBP USD and a USD JPY and USD CAD. And Algo 2 will almost always go with the trend on what and how, where the dollar is going. It doesn't trade against it. So there are not too many trades, but the ones that are there are basis what I have just explained. So that's it. Thank you very much. Thank you for tuning in. We'll have more updates probably today, later, or tomorrow. Thank you. This is Martin from Livemarkets.live.